Hey guys, Austin and Jonathan here
What's up?
with Bunk and Baker Mortgage Group with your next installment of our weekly whiteboard videos. What are we talking about today?
Today we're going to be talking about discount points or buying down your rate. So when you're buying a house, the loan amount, the purchase price is such a big deal, but after that the interest rate's a big deal. And so how do we get that interest rate lower if it makes sense for you, get it below market rate?
That's right. So one of the things that we like to talk about out of the gate with discount points is, do we make more money if you buy the rate down? The answer is no.
Nada.
We don't make any more money depending on what rate you pick. So we don't care what rate you pick. Makes no difference to us. What we care about is helping you figure out which one makes the most sense. So with rates and closing costs, one of the things I talk about is that they're always in a pendulum with one another. The lower your interest rate is, the higher your closing costs are going to be, and vice versa. The lower your closing costs are, the higher your rate. So what we want to figure out is, where's that sweet spot? Where's the point where it makes sense for you? But before we can get into that, what we need to talk about is what makes up your interest rate.
How does it come together?
So everybody goes through basically a formula box, and we figure it basically spits out that rate. These are the things that do that. First is going to be your credit score or your FICO score. Next is going to be, how much of a down payment are you doing? How much equity will you have in the property? Or inversely, what's your loan to value or LTV? Those are the flip side of the same coin. Loan size, how much are you borrowing? Are we talking about a $100,000 loan or $1 million loan? People ask us all the time, what's your rate? What's your rate? What's your rate? And it's like, well, what's your situation? And because everyone's different. So loan size is a big deal. And then loan program is huge. I mean, are we talking conventional loan, VA loan, jumbo, USDA, FHA pricings?
Yeah.
All over the
Lots of options.
Yeah, you could take the same person, same property, and swap the loan program, and that's going to change what rates we're looking at. So on this scenario, we're working with a $400,000 purchase, 20% down, $320,000 loan amount. This person that we just randomly plugged in, they got spit out at a 4% interest rate today. So what we want to know is, what does it cost? How do they get down here to 3.5?
Exactly. So the market rate for this situation is 4%, but they can buy all the way down to 3.5%.
Mm-hmm. All right, check this out.
Hey-o!
Sound effects and mortgage magic. All right, so what we see here is that, and this is a kind of a standard structure, is that every half point you spend, typically you'll see that move the needle about 1/8. That varies based off of your formula over here, your loan program, but over the course of at least my experience, this is a pretty standard structure. Right now though, we're seeing it a lot cheaper. So if you're interested in looking at this, like, your numbers might look totally different. This is just to explain how the structure itself works. So to do when we talk about a 1-point buy down, what we're talking about is 1% of the loan amount. So $320,000 loan amount costs you $3,200. That moves the needle 0.25% on the loan amount. And so if you're wanting to get all the way down to 3.5, you're spending 2 points to get there.
Exactly. So like you said, we're moving those scales again. We're making bigger closing costs, but we're getting that rate down.
Yep.
And so in this situation, mortgage payment, just the principal and interest here, would be $1,527 with par rate, 0 discount points. But we can get you all the way down to $1,436, which is about $100 a month in savings. That's $1,200 a year. That's a pretty significant
That makes a difference.
But it's going to cost $6,400.
So is it worth it?
So is it worth it? So we got to look at the ROI. Like Austin likes to say, math is math. So
Math is math, baby.
So let's look at this one, $6,400. So if we look at $6,400, adding on that closing cost and monthly savings of $92 is roughly $100. We got to look at the ROI in months. So if you do this calculation, we're looking at about 69 total months, something like that. We divide that by 12 because there's 12 months in a year. And so in this situation, we got about 5.7 years until you recoup this extra $6,400 in closing costs. So after 6 years, you would totally see huge amounts of savings while also having $100 less every month in your payment since you bought the house or closed on the markets.
Yeah. You're saving that almost $100 a month out of the gate. So that's real savings to you. But the question is how long at that savings until you
pay back the
have
$6,400.
saved $6,400, 5.7 years. that's how we look at it. Every scenario is different, but this is how we approach it to figure out, hey, does it make sense to buy your rate down? If you're going to be in that house more than 6 years, yes,
absolutely,
it makes sense if you've got the money to do it. If you don't have $6,400, but you know you're going to be there longer, maybe you've got $1,600 that you can use. And so we'll look at every scenario is different. What can you afford from a buy down standpoint? How long are you going to be there? That's what we do when we look at this. A lot of people will say, I'm not interested in discount points. Well, if this is 0.7 years, you should be interested in it.
Very interested.
If it's 29.7 years, you should never do that. So the scenario is just, let's let math be math, and let's figure out what makes sense for you. So that's what discount points are. That's how they work. If you have any questions or any comments, light us up with the DMs or comment below, above, anywhere in the social media world.
Double tap.
Yeah. All right, guys. Thanks for tuning in. See you next time.
See you guys.
Woo! Woo! Are we going?
Yeah.
All right. Hold on, I gotta compose myself.
We're rolling.
They see me rolling. They hating. Patrolling, trying to catch me riding dirty.
It's stuck in your head today.
It is.